Hi everyone, my name's Darryl Panes, CEO at As Good As Gold Australia, and today once again I'm joined by my brother Brian.
Thank you, Darryl.
Partner at As Good As Gold, and today we have a very special guest, a returning guest, none other than the founder and chairman of GATA. GATA, of course, being the Gold Antitrust Committee. Now, Bill and GATA have been for around 20 years now, been absolutely committed to exposing the manipulation that takes place within the precious metals sector, the influences that it has on the pricing of gold and silver all around the world. Bill is an icon in the precious metals space and is deeply respected by all. Welcome back, Bill Murphy.
Thanks, guys. I really appreciate you having me back.
It's good to see you again, Bill.
Oh, yeah, absolutely. It was just over a year ago, Bill, that we spoke last. How time flies. But since we spoke then, you talked about gold and silver, of course. That did come up in the subject, and you did mention that gold and silver would go up quite dramatically in price since then, and you were correct once again. Both metals have performed very, very well. Had it not been, I guess, for the manipulating processes that take place by certain parties, then that increase might have been even more dramatic again. But having said that, I know that we have a lot of subscribers, viewers, Brian, that watch this channel regularly, and there are some new people, of course, that are coming on board. And once they start to research this subject, they recognise that there is manipulation taking place. There's more to it than meets the eye. And I don't think we've got a better person in the world who could share that information than the gentleman that we're interviewing right now, of course, Bill Murphy. So what I'd like to know, Bill, if you could share this information with our viewers, who are these entities that are influencing the precious metals market to start with? We hear about, and you've made reference to the gold cartel. Who are these entities and how long have they been impacting the market?
Well, you got about a half hour here.
We do. We've got a half an hour.
Anyway, the gold cartel's been going for a long time, and the gold price used to be fixed in the United States. And basically, it's the Fed and Federal Reserve Bank and the U.S. Treasury, the bullion banks like J.P. Morgan and the Bank for International Settlements and other banks. And basically, they've gone out of their way over the past many years to manage the gold price as best they can here and there to keep them from rising, because a rising gold price, and they have to include silver because it's a monetary item, affects how people look at the markets and interest rates, the dollar. And it's all related. So it was Paul Volcker, who used to be our Fed chairman many, many years ago, said, up for gold is bad, down is good. And even he wished he'd manipulated it more. So they do whatever they can to manage the price so it doesn't reflect something's going on that's bad. I mean, if gold was up $150 in U.S. terms tomorrow, everyone would say, oh boy, what's wrong? And everyone would start explaining that something's wrong in the financial system. So they keep it under control. And last year when we spoke, it was, in my opinion, and the gold had just broken out, I think, from 1,200 in the end of May of last year, that the bad guys, I call them, the gold cartel, was losing control of the gold price because of a physical shortage of supply. Silver didn't react till, a long time later in May of this, in July and August of this year, when it broke above 21, went to 30. Anyway, we had $20,080 gold. We almost had $30 silver. And since throughout August through the end of this year so far, they've gone right back to holding it under control. Now, I'll get to what happens next, but you look at today, for example, I mean, it's ridiculous. You had lumber taking off, copper taking off, oil taking off, dollar going down. Didn't make any difference. They wouldn't let gold has been under control for months. The good news is, if I'm correct, and some of my colleagues are correct, is that they're running out of enough physical supply to manage it as they've done. They can come up and they can do it for a period of time, but then they hit the wall, they run out of supply like they started to do a year and a half ago in gold and 4 or 5 months ago in silver. So this is a very, very frustrating time right now because, gold and silver are just sitting there doing nothing and when they should be going up. But they're likely to explode out of nowhere because of this lack of supply that's gradually dwindling. And, these are the richest and most powerful people in the world. So they can get away with things for a while. And many days in the past, they would attack for a year or two and gold and silver do anything. That's not the case anymore. They can calm it down, but they can't take it down. I'm surprised they've taken it down this much, honestly. But I think at some point in the near future, we should explode again.
So how long has this influencing factor been taking place? How long have they been at it? And is it more dramatic now? Are they having, you're saying you're surprised that they've had the influence that they have of late. Over the last year or two, has their impact been more significant than it had been 10 years ago?
That's a good question. If you think of what's just happened, my colleague James McShirley told the people that follow me today that 25% of all the dollars that are in circulation were created in this year.
Right.
So, when you think of what other assets have done and our stock market has done, and you say, what in God's name are gold and silver doing down at these lowly prices? They should be much, much higher, and they are going there. And it'll probably start up again out of nowhere when we least expect it. Once this recent, tedium of what they're going through right now ends, and they don't have the physical supply to keep the price down.
Okay, now this manipulation generally takes place at what one would call option expiry. Is that correct?
That's one time. It just happened in December, and what scared me, there was a lot of smart colleagues around what I do that were talking about a December delivery problem for gold and silver, and the prices were going to explode, and there could be failures. And I said, there's too much talk about it, and that's when they like to attack. It also was the beginning in December was an option expiration. That's when they like to attack, to wipe out the speculative longs on the COMEX, which is the paper market traded here in the U.S. in gold and silver.
Okay, so how long, can you explain to us the actual process that takes place? The actual process, how can you impact on a market as effectively as they do? Can we take us through it, step 1, step 2, step 3? Is that possible?
Yeah. Basically, they've got physical supply that they can borrow from central banks and lease it out. For example, they throw supply into the market to affect the price. In other words, greater supply, affects the price goes down. And then you've got what's most followed is what they do on the COMEX in New York with gold and silver are traded. It's the paper market, the futures market, as they call it. And they go into affect the physical market by what they do in the futures market, because a lot of people in the industry use it and so on. And they try to get the price down when they want to. They get the price down, take the gold and silver prices down. So the speculators get all upset and sell out their positions and get out. And they just coordinate those two activities with the selling of physical gold and silver through leasing operations or just selling it outright with what they do in the paper market, and they just constantly stay at it. Like I mentioned about today was a perfect example of how they were they just put gold and silver in lockdown, and you had a day of any day when gold and silver should have gone way up was today. Didn't happen. They were flat, didn't go down much at all, but they just wouldn't let it, let go of it.
Some of these main perpetrators have been fined hundreds of millions of dollars.
If I may,
people like J.P. Morgan.
$920 million. Oh, and it's the Criminal Justice Department in the U.S., as you probably know, is called J.P. Morgan. It's a quote, criminal enterprise.
Yeah.
What more can you say when our own Justice Department calls J.P. Morgan a criminal enterprise? And because the government is actually still behind it. These are different sections of the government. The CFTC, which regulates the gold and silver markets, the SEC, they don't do anything about it.
Yeah. So So the only way that you could control this at the end is the penalties would have to become much, much stiffer. It probably really needs someone to go to jail, doesn't it? that'd stop proceedings in a real hurry. But it's not going to be the case, is it?
Well, most of the JP Morgan traders all got bonuses this year.
It's not a laughing matter, but
no, it's not.
It seems as though the penalties for this manipulation are just very minute, and they pay the penalty, put a band-aid on it, and keep going.
That's right, and because the government really won't go after them, they just keep going with it. And of course, when we try to expose it, and thank you for having me on, most of the media doesn't want to talk about it. My colleague Chris Powell does a great job, sends all kinds of stuff to the media. They won't even mention our name. It's not even he said, she said is not allowed. That's how bad this is, and what a sensitive thing it is for the people involved in the industry and everybody.
Yeah, well, mainstream media and governments, of course, gold is their arch enemy, isn't it? Mm-hmm. Because it does expose the absolute mismanagement of governments and fiat currency and the devaluation of currencies. So they've got to do whatever they can to keep the price of metals down. Bill's right. I mean, if in fact the economy is in disarray, gold always responds positively, doesn't it? So it's bad. It's bad for everybody else. But at some point of time, gold breaks out. That's really the point, and we'll talk about that a little bit later on. Brian, I know that you've got a question there.
Bill, I've got I think the next 2 or 3 questions, and Darryl will move in after that. Before I actually start with the first question, I just want to bring to the audience about when we've just mentioned how gold is kept down, the confidence factor of the US dollar is up there, and whatever. But what I want to bring to the audience is the fact that gold has always been money. Always, for 5,000 years, have been money. And I bring this point up, and Bill might even mention it to you a year ago. I'm going to bring it up again. How powerful gold is as money. And that is, if we go back to 1912, when Henry Ford was building his motor car, he brought that motor car at 100,000 units. The price of that motor car was around about $375, $365. But in the price of gold, if you had 18 ounces of gold, you would pay outright that Ford car for Model T for 18 ounces of gold. Now, let's look at these figures now. So we move ahead 110 years to today, right? And that motor car in the United States has gone from $375 to about $30,000. In Australia, it's about $40,000. But when you have a look at the gold that you pay out for that motor car, it's sitting around 18 ounces of gold to 20 ounces of gold. But only in the last 6 months, it's actually dropped to 15 ounces of gold. So let's put all this together. Gold is money. It cost 18 ounces in 1912. 2020, it's now costing 15 ounces of gold. And by the way, these figures are with a 40% backing, not 100% backing. Well, look at 100% backing of the currency. An actual motor car would be between 3 and 4 ounces of gold. That's the power of gold as money. So as we at Darryl and I are looking at these questions we're going to put to you, Bill, I want people to remember that gold is money, and that if you have the money backing or currency backing by gold, we would be in a far better position. Okay. Bill, I'm going to put a couple of points here, and then we'll just ask you a very simple question, certainly in my mind. I'd like your thoughts about the $100 fall in gold just a few weeks back. Now, for the audience, by the way, this interview was supposed to be a couple of weeks ago, but we had coronavirus upset us in South Australia, so some of these things happened 2 or 3 weeks ago. So there was a $100 fall a few weeks back. Now, prior to that fall, we had a $100 rise over 5 days from 1860 to 1960. These are US dollars. Then the crash of $100 in 5 hours. 5 hours. You can see it on the graph. It just dropped like a hot potato. It was said the cause came about from Pfizer, pharmaceutical company, announcing a COVID-19 vaccine and also a Biden victory. President Biden, so-called President Biden may be coming up. But before you comment, comment on this, I would like to present some figures that I came across. The CEO of Pfizer dumped 62% of his own stock on the announcement of the vaccine. There were only a small sample of 94 test subjects, and the availability for the majority was going to be December 2021. Bill, in your opinion, what really caused the price to drop $100 in that quick fashion?
Of course, and I was going to say what I told my people at the time, is the gold cartel. All this stuff this is the kind of thing what they'll do to try to take advantage of something and put verbiage out there. So it doesn't make any sense sometimes. I mean, first of all, the big drop came when gold broke technical support at 1850. It just went straight down. That's a big deal. Even as of just what we've just seen, gold came back to 1850 today, and they knocked it right off that again. So it's trying to make a comeback. But basically, this is as I mentioned, this is what they'll do to just try to create a situation to get the speculators out of the market. And this also happened to come around the December delivery period, which I didn't never think they would do what they did that badly. But I said, we got a problem here because they're going to attack it. And we mentioned earlier an option expiration at the end of November, early December, first notice date for when speculators have to take delivery of the December contract, the futures contract, or get out of it. They just combined all of this stuff and went after gold and silver in the most vicious of manners, and they accomplished their goal. If anything, the Biden victory is bullish for gold, not bearish.
We have heard over here that if Biden does win the presidency, that he's going to spend bigger than Trump ever did. So, yeah, that should be good for gold. So that's not very long to wait. Mid-January,
No,
supposedly.
No, it's
Later on, I think Darryl will talk to you about contracts. How do these I don't want to ask this question just yet, because I think Darryl's got that one coming up. But how do these contracts, a contract of gold, a contract of silver, how do they come about? But that's for Darryl to ask you. My second question, Bill, during that $100 fall, 7 major Swiss refiners never saw any movement in the demand, thus verifying the move was a paper contract move only. No physical was exchanged. Meanwhile, the Swiss refiners are out to 5 to 6 months delivery on 1 kilo bars. So they're about 75% capacity at the moment, coronavirus being part of that. They're doing 1,000-ounce bars. This is obviously for the big boys around the world. But when it comes to 1 kilo bars, the retail market, we're seeing it in our business, because we sell a lot of 1 kilo bars. The Europeans are talking about 5 to 6 month delivery on 1 kilo bars. So the retail market is suffering. Does the year 2021, this next year, look any better for the retail investor as far as delivery is concerned?
Well, it's a great question because, again, some of my colleagues keep reporting on all these physical shortages where you can't get supply. And yet the price action isn't saying that at all for the time being, what they're doing. I'm the advocate of they do have a major problem with physical supply like you're talking about in both gold and silver. And that's why gold and silver were trading where they were. And somehow they mobilized enough to coordinate their selling activity on the commodity exchange and the physical markets. And of course, with other assets all taking off, as you mentioned, what they're trying to do is demoralize investors. In other words, geez, what am I doing? Look at the NASDAQ going here. And we don't even want to discuss the cryptocurrency. But it's what they do. But they're going to hit a wall where all of a sudden gold and silver explode out of nowhere because of what we're talking about here. They don't have the physical supply to carry on like they used to. Like they can take charge in a battle, and they used to be extended battles. Now the battles don't last too long because they don't have the ammunition to continue on.
Yeah. We're saying to our clients over here, I mean, we all know it's happening in your country as well as ours, but what we see is that people wait for it to get its legs on. I'm talking silver and gold. Get its legs on, make a move, right? And then they come in and, I better buy some. Guys, the time to buy is when it's cheap, and that is right now, and when you can actually get it. I mean, we can supply our kilo bars at the moment in 3 to 4 weeks, but if we go back to last March, when there was a massive influx of orders, we were out to 7 to 8 weeks delivery ourselves. So it's not a matter of price; it's a matter of whether you can get it.
That's what's going on now, and I couldn't agree with you more. That time to buy is times when people get demoralized and they want to throw in the towel, like we have now. I mean, silver's been at 24. I talk about it all the time. It never leaves 24. But it's going to go big time and much faster than it did this summer. It's just, again, you're so correct. Now's the time to be looking to buy and get in when you can get it so cheap.
Yeah, exactly. Bill, before I hand it over to Darryl, I've got one more last question. And this one is based around the US debt. I mean, in Australia, we have plenty of that as well. But, what is emphasised is the US debt. So, between 2009 and 2020, the US debt clock is still ticking over right now at $27.2 trillion. In 2009, the US federal debt was $11 trillion. And in 2019, it was $22 trillion. And now it looks like we are targeting to finish off this year at $28 trillion. Not far off of that. It is most likely that at the close of next year, the debt will probably be around, looking at what's happened in the past, so at the end of next year, the debt will probably be around $34 trillion, and that is a 21% increase. As I see it, if your assets don't rise by 21%, I believe you are going backwards. And of course, you pay then capital gains tax on the margins there. Bill, do you see it as I see it with all this money printing? That's where it's heading, 34 trillion debt.
Well, I don't know about that number because that's a little bit over my head. But I can say what the obvious is that creating trillions and trillions and giving money away and having nothing to back it up, that's devalues everything else in the dollar and everything. Like the dollar, it can't be more bullish. And what we have now in the United States, I mean, I've been a conservative Republican now. We don't have a Republican Party anymore. Forget what politics for Trump or against him. He didn't stop the trillions or cut the deficit or cut the debt. It's the same as under the Democrats. So that's going to continue. And for people to protect themselves with gold and silver, I mean, I'm jumping up and down about it right now because it's the right thing to do. Again, regardless of politics, it's all the same.
Yeah. Well, I know Darryl's going to continue on with the questions. As I see it, the 21% increase. If you've got assets, you're buying land or you're buying anything, unless you're going up by the same amount, you're going to be you're going downwards. You're not going upwards. And we've done our calculations over the last 20 years. Gold far outweighs any other investment on a regular, repetitive relationship to the inflation rates and things like that.
Certainly not reported by mainstream
never
media
reported.
or the like.
No, Bill, never reported by the mainstream media.
If I may, when I started, which took 2 years, and we had a conference in South Africa, in Durban, and the price of gold was $256 and silver was like $4. So look what it's done in that time. Now, even though it's silver at $24, it's the cheapest thing in the world. I mean, it's going to 100 in my opinion. We can talk about that or not, doesn't matter. But gold. Look what gold did during that time. So we're going to have moves like that again in the not too distant future.
We both agree upon that.
And look, if you spoke to the average person in the street and suggested to them that gold had outperformed property, I'm talking real estate. If you said
or the stock market, the S&P 500,
absolutely, they would say, "Don't be ridiculous," because they've done no research, of course. But it all goes under the radar for obvious reasons.
Absolutely,
as I said, gold is the arch enemy to all governments around the world. And I've got some figures for you, and I just want a response from you if I could, Bill. This is really interesting, but people talk about bonds, they talk about, and look, the biggest 6 investments or biggest returns on investment in the last 20 years have been bonds, copper, gold, iron ore, silver, and stocks, but not in that order. Now, let's have a look at the order of a return on these investments. Number one, no surprise to us, of course, and no surprise to Bill, gold is number one, the best investment in the world over the last 20 years. It's up 423%. This is in US dollars, Bill. Copper is up 246%. Iron ore is up 236%. Silver up 230%. Stocks up 224%. Bonds up 165%. And just a matter of interest in gold too, well, I mentioned number one at 423%. In Aussie dollars, it's up over 700% in that 20-year period. Now, I'm really interested in your comments here, Bill, but what is it going to take? What is it going to take before, the populace at large recognise this? I know it's not in mainstream media, and if it was, we'd know straight away. But we're not going to get their help. But we've got to get this message out there, Bill, because the returns have been phenomenal. So what's it going to take? Have you got any ideas?
Price action makes market commentary. And what's going to change everything for me is, and I have not been correcting this yet because I'm looking for $100 silver. And the gold silver ratio right now is like 76 to 1. It ought to be, say, 30. And that's when you're going to get your silver to catch up and I think overtake gold for a period of time, or at least it's certainly going to equal it. And that's what I see coming, sometime within the next year. The silver move has been delayed and delayed and delayed. And when it takes out 30 again, in order to rock it up to 35, 37, then of course there's 50, and then there just won't be any supply to meet the demand. And that's when everyone's going to pile in to these relatively tiny markets, and they just won't be able to get supply. You saw that what happened earlier this year, and that's going to be like nothing compared to what's coming.
Yeah, look, I believe, and I've spoken to a number of people about this that we've interviewed, that leading up to the GFC, 2007-8, the Western world, about 1% of the Western world invested in gold. Just a fraction under 1%. At the end of the GFC, say 2011, thereabouts, the Western world was investing around 7.8% in precious metals. Now, if you go from 1% to 2%, you have a massive impact on the market. I mean, that's double. So, I guess what happens here, I'm interested in your point of view, of course, once you've got a market that doubles in its capacity to purchase precious metals, 1% to 2%, and then to 3% or 4%, I guess the cartel starts to lose its impact. It's overrun by the populace at large. Would you agree with that?
Absolutely, and that's what I've been referring to, that when that's their Achilles heel is the physical supply issue, that they need to feed the demand that services all over the world. It has to be met. And they've done different, shenanigans, taking, for example, they're selling the same gold from the same bullion bank, let's say 100 times.
Yep.
Various people. So people, and they hold the gold. So people think that the bullion bank has the gold for them. They don't. That's all. It's been leased out or lent out all over the place, and it's gone. And I think Deutsche Bank had a problem last year when they got rid of their private accounts. I think when they had to put gold back into people's accounts and gold started to take off. There's all sorts of various things, as I mentioned, shenanigans that this gold cartel will do to maintain their operations. But it's just going to hit a point where it's gone. You can't get it. It's unavailable. And then you're going to see price moves of, $100, $200 a day up in gold and silver up $1 to $2, $3, that sort of thing.
Yep, I like your expression shenanigans. I really, I really do. I'll share some shenanigans with you, Bill, and this won't come as a surprise. But we've got a treasurer here in Australia, Josh Frydenberg. I couldn't believe his statement the other day. He said, "We are officially out of recession in Australia." I couldn't believe the statement. I have the ability, of course, to with my viewing to be able to rewind, because I couldn't believe I just heard it. So I rewound, and sure enough, he said we are officially out of recession. How can you say that, Josh? What leads you to say that, says the commentator. And Josh says, well, it works like this. He said, we've had a 3.3% increase in GDP over the last quarter, the September quarter. 3.3%. He said that is the biggest increase since 1976. I mean, they really had to emphasise it. I sat down for a second and I thought, you've got to be kidding me. I shared the information with Brian, and he said, well, from what base are we referring to? Now, I want our viewers to understand what's going on here. I really do. Bill, let's say one goes into business. Let's say you go into business, and in your first week, you're selling tyres. And in the first week, you sell $1,000 worth of tyres. Now, it's not enough to keep you in business, right? If you kept doing that, you would go broke, right? You need to do better than that. But it's not a bad starting point. The second week you do 2,000, you double your sales. Now, that's still not enough to keep you in business with all of your overheads. However, it's not bad because of the base you were starting from, zero. Okay, so the following week you do 4,000, and the following week you do 8. Now, the point I'm getting at here is when you start in business or you start from a small base, then it's not difficult to double your sales, okay? But then let's say you survive for a year in business, which most fail to do. But let's say you survive in business for a year, and let's say you're turning over $500,000 a month. Imagine how much more difficult it is to go from $500,000 in sales to $1 million in sales the following month. And this is the sort of stuff that we're hearing at the moment from mainstream media. We're talking about the biggest impact or the biggest growth in GDP since 1976. From what base? And this is the stuff that we're being told. Yeah. I hope Australians and Americans are not believing this guff. I really do. So the point, but the point I'm leading to here is he's talking about we're out of recession. I think that Bill Holter and people like Bill, people like Egon von Greyerz and many, many others are saying we are so far in debt that governments have made such massive commitments. They are financially in disarray. I think we're going to have to wait a very long time. I know from the Great Depression, it was something like 26 years for full recovery. What are your thoughts there, Bill, so far as how long? I mean, we're in this for the long haul, aren't we? This is going to be a very long recovery process.
Well, I wonder if I should get into the tie business based on what you're talking about. But anyway, the numbers here in the United States, a lot of us, I had my good friend John Emery of Sprott fame, we can't figure out what some of these numbers that are coming out because this coronavirus, and forget what was happening before the virus hit, all the money that was going out there and the numbers, and I don't know anybody who's not affected by this thing, no matter what you think of it. You think of the sports events here in the United States and all the activities and travel and the stores and the restaurants. I mean, and yet you'd never know it in a different way of looking at differently what our stock market has done. I mean, it's like keeps going up. And it's like, of course, I'm an advocate of the plunge protection team out there from the working group on financial markets. That's part of the U.S. government again, which is allowed to go in and quote rig the stock market. I mean, they don't like to talk about it, but that's public knowledge. these things are way overdone here. I can't talk about the percentage terms like you just did, but I think, there's still a price to be paid for what's occurred. And even what they had to do when they're trying to get another stimulus going, well, they just gave out all sorts of money to people with nothing behind it. I mean, they sent me $1,200, which, they sent it to everybody. And then there was money for kids. This money just gone. And that has to have an effect big time as we go along in the years ahead.
Yeah.
I
mean, generally, as what I see it, Bill, is that to create wealth, you've got to produce something. If you're giving people $1,200, which takes only split seconds to produce from a printing press, you're not producing anything. So, hey, I agree with you. It's got to come out very soon. 2021, 2022. But I think next year you will see some inflation results. And that gets back to another question of what I consider inflation is. The description of inflation has been challenged. It's been altered. And I don't know what it is. I think it's worldwide. But bottom line is inflation is what used to be a basket of goods of everything that was produced and sold and consumed. But from what I'm reading in the last couple of years, they've taken out a couple of items, and those couple of items are food and energy. How we survive without food and energy is beyond me. And so that's maybe one of the reasons why they say inflation, they can't get it over 2%. Well, of course you can't, if they take out those types of items. Do you agree with me, Bill?
Oh, absolutely. The food is one of the things that I've most noticed, that's gone up in price. God bless these restaurateurs, but you go into the restaurants now, the prices of meals double what it used to be just recently. And a lot of the stable items have all gone up. And there actually could be some sort of crisis coming in food, getting it deliverability and that sort of thing. We'll see.
Yeah. Well, my last question is I'm just going to ask you a couple of points, bullet points here, and just see some feedback from yourself before Darryl finishes off. I was listening to Fred Hickey. This is about a few weeks back, and he brought up a couple of points, and these are those points: record U.S. budget deficits, soaring trade deficits, U.S. trade deficits. What's going to happen? We continue to have soaring U.S. budget deficits, soaring trade deficits. How does America get out of this?
They just keep doing what they're doing. We talked a little bit about it earlier, it doesn't matter what political party's in there, the money just keeps getting spent. They keep going on doing the same thing. So, at some point, the question is, do markets, all of a sudden, stock markets collapse or get affected by it because some event triggers it? I don't know, but I don't see them stopping anything. And they say that Democrats and Republicans are going the same route. There's no check anymore like there used to be, or at least there was supposed to be. It's not even talked about anymore.
Yeah, it's very true. Next 2 points. We're nearly coming to the end here, but I think they're vital points. The Federal Reserve is printing $120 billion per month. Other central banks are also printing. Australia, for the first time, is now printing money, quantitative easing. Is printing money? I know what printing money does, but they print it as if it's the savior of the whole economy. What's your thoughts?
Well, again, I'm prejudiced. It leads us to an obvious conclusion. All this money is just going on and on. As mentioned earlier, 25% of all the dollars in circulation were printed this year. What does that mean for things of value like gold and silver? And that's why, your people at Folly, what a great time to be getting into purchasing physical gold and silver right now before this all kicks in, because it's all going to kick in. You can count on that.
Yeah. Over the last little point, over the last few years, I've watched the month of December and January, and generally has been, it doesn't happen all the time, but generally, midway through December and right throughout January, silver and gold have a very good run up, right? Hasn't happened yet. Do you think things have changed, or do you think we're just about to get for the next run up?
Well, as I mentioned earlier, these last few months have just been terrible. And I think what's going to happen is you're going to see gold and silver explode out of nowhere when people least expect it. And that's why now, again, I don't think we're going down much more, for sure. But they're just going to explode because of what we've all been talking about. And the bad guys, as I call them, won't be able to do anything about it. They've had their way, and it's about over with.
Yeah. Yeah. Yes, what we're thinking as well.
Yep.
Darryl?
Many years ago, Bill, I met a gentleman by the name of Charlie Tremendous Jones, and he came from your side of the world. He was an American, a wonderful public speaker, a motivational person. I learned a lot from him. He used to refer to two of the most important things in life were the people you meet and the books you read, and I'm sure you'd agree with that, because you learn good things from intelligent, smart people, and you learn probably what not to do from other people. So we learn from all of them what to do, what not to do. And the books you read, of course, very powerful. So what I'd like to do here is ask you, if you could provide two pieces of advice, you've already provided 102 today, but if you could provide just two pieces of advice to budding entrepreneurs, or maybe even the other end of the spectrum, people who are about to retire, what would that advice be? Understanding the question, what would you recommend to our viewers moving forward?
Well, again, after all we've talked about it, our coming from here is to somehow make sure you're covered with a decent amount of funds in gold and silver. And if you want to add to that, get into some of these gold and silver shares. I mean, the HUI is half of what it would be, while other stocks are going berserk to the upside. And the gold and silver stocks have just been, relatively speaking, outside of some good exceptions, horrible. So that's going to be a tremendous opportunity in both the physical markets and in some of the shares. And so, again, I'm prejudiced, but boy, what an opportunity.
Yes. I mean, we get back to Jim Sinclair, don't we? Yep. Really, every time we get back to Jim Sinclair.
Become your own central bank.
Become your own central bank. I mean, I'm not a great supporter of the central banking system at all, of course. That's become very obvious. However, they own gold. And they own gold for certain reasons. And that's to have influence and power and back their currency. Without gold, you have nothing. And so, as Jim would say, why don't you just do what they do? I mean, why don't we learn a lesson from them? Become your own central bank. Have you got any comments you'd like to emphasise on that statement, of course, Bill?
Well, Jim Sinclair's a really smart guy. It's funny, when I first started way back in the 70s with Shearson Hayden Stone, when he was becoming a legend with Mr. Gold in New York City, when gold made that big move in 1980, I knew his broker, his personal broker very well, and we were good friends, and have the highest regard for Jim, and he's a legend and deserved his reputation.
Yeah, and of course Bill Holter. I mean, Bill is, he has his way about determining exactly where the gold price is going to go, and it's all based on debt and the amount of gold in the world, of course. And Bill comes up with at the moment around $100,000 an ounce for gold. That's where he believes it'll go in a reset. I know it's big numbers, but based on his approach, how he evaluates that, it makes considerable sense. So, why wouldn't you have some? We get back to that all the time, don't we?
Yeah, exactly.
Good guy too. He's a good man.
Yes, absolutely, and he's been fantastic for us. I mean, he's readily available for interviews and just so supportive.
And when you think about those figures of $100,000 for gold, in reality, it has to come that way because the bottom line, I gave you some figures right at the beginning about the price of a motor car. And the price of a motor car shouldn't be any more than 3 ounces of gold. And working on $100,000 gold, you buy a Rolls Royce. But, the bottom line here is, under a gold standard, everything is created equal. right? And it's how you produce your goods. Whether you're under a communist government and you use the pitchfork to dig gold out of the ground, or you use an excavator. If you're a capitalistic country, you dig a lot more of it. And so therefore, obviously, a gold standard equalises out everything. So look, give me a gold standard, and I would argue to anybody about it falls and against of a gold standard, and I have never lost one yet. So I think we're about to change things around, but we got to have politicians. We got to have politicians that know what currency is and know what money is. And once they know that, hopefully they're not in there to create their own pension plan. But they're creating a good, viable plan for the whole population of their country.
Bill, thank you. Sorry.
Well, I was just going to say, I'm hoping that you said it's been about a year, and look what's happened in this past year to gold and silver. Even though they've just settled back here, it's been big advances, and I think by the time we get to see again, the next time we get together, we'll all be celebrating.
I think you'll be right, for sure. What I'd like to see happen in the meantime is, because I know GATA does a wonderful job, and you, Bill, are an extremely dedicated person in emphasising and bringing to light this manipulating process that continues to take place. I think everybody should know about it. It's typically people you meet in the books you read again. What can people do? What can our subscribers, what can our viewers do, Bill, to connect with GATA and just learn a little bit more or a lot more about what you do? What would you suggest they do?
Pretty simple. My colleague Chris Powell, as mentioned, does a great job. He's Secretary Treasurer. And go to www.gata.org, GATA.org, and then sign up for free. I have a website which has got some Australian subscribers, metropolcafe.com. People can sign up for a 2-week free trial on that, see if it's of value. But Chris is has got it all documented. He's got a great library. Anything people want to know about the manipulation of gold and silver, they just can look and see what he's collected all these years, and it doesn't cost anything.
Yeah, wow. Look, I mean, I would strongly suggest that our viewers, our subscribers take advantage of that offer and just connect with GATA and start to get a better understanding, because there's no organisation in the world that's set up better to share this information than GATA. So
the information is there and it's free, so
Yep.
There's no reason why people shouldn't know enough about what money really is and what gold does.
Exactly. Look, Bill, thank you so much for your time today. Thank you so much for what you do in the precious metal space. It's really appreciated. I thank you for your time today. It's so much appreciated, and we really do look forward to our next interview with you. And I think you're going to be right. I think we're going to be talking about much higher numbers in precious metals than where we sit right now. So also, I'd like to thank our viewers and subscribers for continually supporting us, and suggest until next time, stay well, stay focused, and bye for now.
Bye for now.
Thanks, Bill.
Thanks, guys. Really appreciate it.